It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, October 27th. Boy, oh boy, are we squeezing out the last few drops of this amazing month of October, right? Just about ready to start the old World Series. Very, very exciting. Halloween right around the corner. I remind you about your costume, right? You don't want to be unoriginal on Halloween. It's on a Saturday this year. You better be ready. I'm going to check back on Thursday night's newsletter. We have a jam-packed newsletter in store for you guys tonight. I'm not going to disappoint. We get quite a bit of ranges. You're going to see one common theme, and that is we have trading ranges going into tomorrow's session. Why do we have trading ranges for tomorrow's session? I'm glad you asked, because tomorrow is Fed Day. Today they began their meeting 8 times a year, the FOMC, right? 2-day meeting. Tomorrow afternoon at 2 p.m., we get the announcement from the FOMC. We talked about it yesterday. Didn't see really any repercussions of it or any side effects of it leading into it today. But tomorrow you're going to definitely start seeing this pending FOMC announcement that's going to be coming out tomorrow. So tomorrow afternoon, and we're going to talk about that as we go through this tonight. But be aware, tomorrow afternoon is off limits. Okay, tomorrow afternoon is off limits, especially for all you new traders out there. Tomorrow is a day where you need to be very careful trading after 11 o'clock Eastern Time. Did everybody hear me on that? Tomorrow morning after 11 a.m. Eastern Time, you better be wearing your helmet, mouth guard, whatever precautionary measures need to be taken, batten down the hatches. I don't care what you got to do, but be careful tomorrow after 11 a.m. Eastern Time. If you need a reminder, come out and join me tomorrow in the trade room. We'll open up early at 8 o'clock tomorrow morning. But tomorrow is an early in, early out scenario because of what? The FOMC announcement tomorrow afternoon. And don't even think about trading the announcement reaction unless you've seen at least 8 of those. Yeah, 8 of them. I don't want you guys getting run over by the very volatile, very illiquid reaction that comes from the FOMC. You know, we teach all this stuff here at School of Trade. All right, enough delay. What do we got for tonight? A lot of ranges tonight. Crude oil's range bound this evening. We get a bearish bias going into tomorrow's session, so our plan is going to be on crude to wait for buyers to push this price higher and then look for failures to sell it back down again. The E-mini S&P is also range bound. I told you, you're going to hear a few of these tonight. S&P is also range bound this evening. Very similar plan to crude. There's a little bit of a bearish tone to the S&P here as well, but I don't know. I'm going to guess S&P goes higher. I'm going to show you why in just a moment. I'm going to guess. We'll see if it comes out tomorrow. How about the gold? The yellow metal, that crazy yellow metal, ain't too crazy right now. Why? Because it's FOMC tomorrow. Gold is also range bound. We got some very interesting bullish clues on the gold. I do expect those buyers to try to run this thing higher. So assuming those buyers on gold run it higher, smart traders be waiting to fade that breakout right back down on gold. And the euro is range bound. I know. Another range bound market this evening on the euro. No surprise there. Our plan is the same on the euro. We got a couple clues on the euro. Before we jump into today's charts, though, please remember to read the disclaimer in the description of this video on YouTube. I do not want to get any of those emails saying, well, you said to sell this red box up here. Guys, do not risk real money until you've taken over 100 trades in simulation and you've seen proven success. Do not risk real money you cannot afford to lose. And please don't gamble with this darn newsletter. I'm trying to help you guys out there, but you're making it really difficult by blindly buying and selling these levels. Always wait for proof. And of course, after you're done reading the disclaimer inside the newsletter video here tonight, head over to sidewaysmarkets.com. A couple of reasons over here. First of all, you can grab a free pass. If you're not a member here at School of Trade and you'd like a free pass, come out and test drive our live trade room. You can grab a free pass in the upper left-hand corner. In the lower left-hand corner, pardon my ugly mug, you'll see a spot to register for the nightly newsletter mailing list. Name, email is all I need, and then check your inbox. I'm going to send you a verification email on that. Right below the video tonight, you're going to want to pay attention to this one. All the charts you'll see in tonight's video including some bonus charts, are going to be able to download right below the video. Grab them below the video on the blog. And then over on the right-hand side, you can register for our trial membership. It's not the same as the free pass. Keep in mind, trial membership is different. Read member information, get member reviews, and we've always got someone standing by 24/7, 365 to give you guys a hand. Get off my screen. Let's jump right in. We've taken up enough time of yours already. Now that you know the plan for tomorrow, again, what's tomorrow again? FOMC day tomorrow. What does that mean for you? It means no trading after 11 a.m. Eastern time, okay? Unless what? Unless you've seen at least 8 of these FOMC reports before. I'm not talking about going back in hindsight on a daily chart. I'm talking about if you have traded this in simulation 8 previous times before, because that's how much experience you're going to need to really appreciate the potential illiquidity and extreme volatility that comes after the FOMC announcement. What time is it tomorrow? 2 p.m. 2 p.m. And right, Halloween's on Saturday this year. You better be ready. Okay. Now you guys know that you're cuckoo trading after 11 a.m. tomorrow. You're not cuckoo. It's just the volume and volatility makes it a dangerous cocktail if you don't know what to expect. I'm trying to help you keep the money in your trade account. Trust me. It only happens 8 times a year. Okay? Now, crude oil. Range bound this evening with a bearish bias going into tomorrow's session. So our plan will be to wait for the buyers to push this price higher, like it's doing right now, and then look for failure trades to sell it right back down again. Now, today's sell-off tells us the bears are in control, but the end of the day trading range tells us this market is balanced going into the closing bell. So tomorrow we expect buyers to try to push this higher. I'll tell you, today was a day where the buyers got their heads handed to them 3 times today. Right at the 24-hour open, the ETH open, right? Buyers got basic at the bottom taken out of them. Buyers tried again mid-morning. We saw that happening, and they tried one more time just before the open. The bulls in this market right now have got beat up all week this week. They're due for a break, and I would expect that break to come tomorrow. The real question is, what are they talking about around the OPEC dinner table these days? Yeah, right? What are they thinking right now? Are they thinking about $30 a barrel? Are they thinking this, right? Are they thinking this? We've already heard from a lot of the major asset management firms this week talking about this stuff. Bottom line, though, is we do have a bearish bias, but the buyer is just getting so beat up today. I would imagine lots of sellers made money today. I hope you followed the plan. Every time price went up, we sold it right back down. That was the plan. We stuck to it today. And so we're going to keep doing that. You know, now that I think about it, we've had the same plan since carry the one, dot the I. Yeah, since March last year. So every time it goes up, we're looking for buyers to fail. This is a range-bound market. You can definitely see, though, a couple areas here of interest. First of all, this prior range up here, 44.35, 43.82, you definitely want to keep an eye on that area, right? So we jump up, we pull back in, sell it right back down. We do have a bull channel on this chart right now. This is one of those what you would consider to be a phantom channel. And the reason why I call it a phantom channel is because this is a trading range. And when you see a trading range, you always want to discount the validity of all the channels. The range takes precedence. We're bearish going into the range. We break out. We try to keep going. We fail. We're looking to fade those breakouts. So right now on the crude, ahead of FOMC, and we also have inventories tomorrow, we're looking to fade those breakouts. We get a bearish bias. Remember, wait for proof. Do not just blindly sell this market because it goes higher. Okay? I'm talking to you right now. Yes, don't blindly sell this market just because it goes higher. Wait for proof. Okay, wait for proof. And don't forget, the range takes precedence. So we're looking for range rotation, selling highs, buying lows with failure patterns and proof, and we're going to fade these breakouts. Remember, cutoff time tomorrow is 11 a.m. on this crude market ahead of the inventory report and, of course, ahead of the FOMC announcement tomorrow afternoon. Let's keep going. The E-mini S&P range bound this evening. So we're looking for opportunities to fade all the breakouts ahead of tomorrow's FOMC announcement. Notice I said ahead of the announcement tomorrow. I didn't say fade the breakouts at the announcement. I said ahead. What was the time again? 11 o'clock tomorrow. See, I'm going to keep reminding you in case you forgot that 11 o'clock is the safety cutoff tomorrow. Safety why? Because volume dries up and volatility increases. That's why. There are going to be a ton of shenanigans tomorrow leading up to the FOMC announcement, and this is the market that is going to happen on for the S&P. When you trade the S&P, you're trading against the LeBron James of the trading world, okay? Yeah, if you don't know who he is, he's the best basketball on the planet right now, right? He will dunk over you all day long. So remember, when you trade in the S&P, you're playing against the smartest, most widely capitalized minds and corporations in the world. Don't mess with this market too close to the FOMC tomorrow, not if you like the money in your account. Now, let's go on a trip for a second here. Let's go on a quick trip. That's okay. You can stay where you are. No passport needed. Let's go back in time here for a moment, right? Jump in the DeLorean and let's go back in time. What do you see right there? I see a big jump up. And then what's this? This will be what we call a flag. Okay. What does that tell me? Well, it basically tells me that I can just guess right now the buyers are going to be running for this area right there, right? That's where the bulls have on their radar right now. And of course, because I'm your friendly newsletter guy, I marked that up on my chart this evening to make sure that you don't forget about it. And of course, you're not going to worry about that if it's after what time tomorrow? After 11 a.m., right? Because I love you. So 2072.75, 2073, I don't know what exact area that's going to be, and I don't need to know the area that it's going to be. Why? Because I'm not going to blindly sell that 2072.75, and neither are you, right? Not unless you like to donate to the market. So we're not going to blindly sell it, but I do expect to see at least an attempt here during that lead up into FOMC. Will it continue? I don't know. Tomorrow's major news coming out. What I do know though is that as it's pulling back on this, I'm going to be looking for failures to sell that price right back down in. So the E-mini S&P range bound this evening. So the plan is basically what it was on crude. As the price goes up, I'm looking for proof of failure to sell it back down. As the price goes down, I'm looking for proof of failure, right, to buy it back up. Fade all those breakouts. If you want me to guess right now, I would guess that at some time tomorrow we get a very interesting decision opportunity up around this area. It might not come until after the news comes out, right? That's the reality. So I don't know. But what I do know though is if I had to guess, I would guess tomorrow we're going to find our way somehow up to that, again, I don't know the exact price level, but it'll probably be somewhere around that 2072, 773 area up top there. And then again, we'll stay patient here, waiting for it to collapse back down in, waiting for proof on that to fade that breakout, right? Range-bound market. Expect range rotation, right? From the high down to the low, low to the high, high to the low. Buy those lows, sell those highs, fade the range expansions. What does that mean? What does that mean, fade the range expansions? Well, if I take this trading range and I project it higher, that would be a range expansion. If I project it lower, that would be a range expansion. Isn't that cute? 20, 47, 47. Oh, gotta love the numbers. Okay, so now you know the plan on the S&P. It's very similar to crude oil, right? Look back at crude. Very similar now. The only difference is the S&P is only slightly bearish, right? It's just, again, I hate to draw that channel on there because that channel is going to mislead you. It's a phantom channel. right? It's a phantom channel. Really what you want to focus on is that range. And you can see kind of the same thing on crude. Crude oil is much more dramatically bearish. But again, we see the trading range, expansion, right? These are prime areas right here. These are prime levels to fade because you want to treat every breakout as an opportunity to wait for proof and sell the failure or buy the failure depending on what direction it breaks out. Don't forget, guys, we teach all this stuff to our students here at schooloftrade.com. All right, how about some gold? Oh, gosh. These next two charts are going to give you a little bit of heartburn, I think, because, well, I'll let you be the judge. You're going to see how range-bound these markets are. Why do you think the gold is so range-bound? I heard there was major news tomorrow, FOMC. Why would FOMC make gold and just wait to the euro? Just wait till you see the euro. Gugh, right? I won't even spoil your dinner on the euro yet. But the reality is that when we hear about FOMC, we think interest rates, right? The Fed funds rate. When we think interest rates, we think of the dollar, right? The dollar, of course. Gold is a dollar hedge. Okay, so now we know gold is only like 3 steps down, right, from FOMC announcement. So gold is highly susceptible to manipulation ahead of the FOMC. By the way, what was the cutoff tomorrow on this again? 11 a.m. Eastern time. Man, you guys are good. Okay, so 11 o'clock tomorrow, we have to trade gold. Honestly, I'll be surprised if gold is moving past 10:30 tomorrow. Gold is just like the euro. It's an early in, early out market every day, let alone tomorrow, right? Tomorrow is FOMC, of course. So we know we're going to see a little bit more of this kind of sitting on hands, analysis paralysis. Okay. Now, gold is range-bound with some bullish clues on the chart this evening, which tells us the buyers are likely going to try and run this price higher, while the smart traders will be, by smart traders, I mean you and I, of course, right? We're the smart traders. I'm having fun with you guys. We'll be waiting for them to fail and sell this back into today's range. Gold will be highly affected by FOMC, so get to this market early tomorrow, and please always wait for proof. Although we do see some clues here. What are the 4 clues? You can see them listed right here. There are 4 reasons why, looking at this chart, and again, I don't need news. I don't need fundamentals. I definitely don't need order flow or some magic wand to look at this. I just simply need, right, what I think is a brain between my ears, and here are the 4 clues. I don't need anything complicated, guys. All you need is a simple chart, some trend lines, and some knowledge. It's a beautiful thing. First of all, the bull flag. Now, you can call this a bull flag. You can call it a spike in channel. I'm going to call it a flag, but it could be, really, it could be either or. What do you expect from a bull flag or a bull spike in channel? A deep correction, right, or a correction back to where? Back to the base of the channel, and then an A, B, C, D going higher. Okay, so that's the first clue that tells me this range-bound market is probably going to see this price jump higher here. And by the way, what are we going to do when it jumps higher? Are we going to buy? No, we're going to fade it when it comes higher. Okay, back to the plan. 11 o'clock's cutoff tomorrow, right? Yeah. See, keep repeating it. You're going to get it. Okay, second thing, range undershoot. What's that mean? Look at the trading range. What do you expect to happen in trading range? Remember, a trading range is a flat channel, right? Channel rotation, range rotation. Low to the high, high to the low, low to the high, high to the, nope, we're not rotating. We saw this last week on the euro. Remember that last week on the euro? I can't recall what direction bias it gave us, but we saw a very similar situation in the euro, which we'll talk about next. Okay, so second clue we see here, range undershoot. Why aren't we going lower right now? Something's up. Okay, what should happen isn't happening. It's not definitive, but it definitely starts to, you start to put some of these pieces together here and form an opinion. The third thing, now remember how I said earlier when you see these channels on trading range days, right? This is what you call a phantom channel. That's a phantom channel. Why? Because the range is the most important here on gold. Okay, same thing on crude, same thing on the S&P. When you have a flat moving average with the volume, I gave away my 4th clue, sorry about that. The next thing is going to be the volume, but this bear channel, I like to have some fun with you guys in these newsletters. I got to have some fun. I've been working my butt off all day with my clients, so having some fun with you guys. This bear channel, now you know about range rotation, right? Shouldn't we be seeing channel rotation too? We should. What's the holdup? Why aren't we rotating lower? Oh, I know, because we're in a trading range. So right off the bat, that tells you right away, this is a phantom channel. The final clue is the volume, right? The volume. Now, I'll tell you, this volume I've seen much prettier, right? It's slightly weighted to the bull side, right? We're in the upper third of that range. Okay, that's a bullish kind of bulge or volume profile right there. Here's a bearish one for you. See, crude? There's no way that you can miss that, right? That's a bearish, kind of a bulge at the lower 1/3, right? Okay. Now, don't get me wrong, right? That's not going to give us all the information we need, but it definitely, again, helps to put some pieces to this puzzle together. What's the most important thing? Most important thing is be careful on gold and euro, all of these markets tomorrow. But gold and euro will be highly susceptible to manipulation ahead of the FOMC announcement. Be careful. Second thing is trading range is the most important thing. Fade those breakouts. Okay? Are we blindly fading? No. Where should we be looking for fading opportunities? Measured moves. 1171.9, right? 1175.3. Fade the highs. How? With proof. Buyer failure. Proof. Sell it back down. Fade the lows. Range low. Range expansion. Range expansion. Right? Now you know the plan there for gold. Let's wrap it up here with the euro. We're making some good time for all the great jokes that I managed to cram into this newsletter video for you. Don't you worry. I'm not quitting my day job. Euro. I know, right? Again, another range-bound market this evening. Why do you think it's range-bound? You know why. FOMC tomorrow, right? This is a market. Now, why is the euro so highly impacted by FOMC? Well, again, FOMC, I think interest rates. When I think interest rates, I think dollar. When I think dollar index. When I think dollar index, I think of the euro being over 60% of the dollar index. Yeah. It's kind of a big deal. So when the dollar goes up, the euro has a fundamental negative correlation to it. So if we're expecting major news to affect the US dollar tomorrow, we can expect that to affect the euro dramatically. Okay? So again, another market, get to it early, just like gold. And what was the cutoff? 11 a.m. Eastern Standard Time. Now, this market you can definitely see has a bit of a bearish tone to it, right? We got this impregnated volume profile. I hate that term, but it's kind of the only thing that I don't know. I'm never going to use that term again. I don't like that term ever. You can guarantee it, never going to do that out of my mouth ever again. But we definitely have a bearish bias, right, to that volume profile. And again, you got that phantom channel. Now, this channel is a definite phantom channel. If you're a member of mine, if you're a student here at School of Trade, I hope that you are screaming at the screen right now saying, JJ, are you crazy? You can't draw that channel like that. You're exactly right. Why? Because you got to draw it from the starting point of the day, right? Yeah, that's right. Okay, so this channel is very, very suspicious. That's why it's got to be called a phantom channel, all right? Incorrect way to draw the channel, but that's what you're doing. You're trying to draw this channel, and if you're a client of mine and you don't know why this channel is drawn correctly, please make sure to ask me why tomorrow. I would love to reiterate that for you. So that's going to be a bear phantom channel. So what's going to happen is as we rotate higher, right? Range rotation, range rotation, range rotation. What's going to happen? We're going to run right into that channel high, aren't we? Right? As we rotate towards the high of that range, we're going to run right into that channel high. And smart traders are going to be waiting for sellers to try to sell it, and then they're going to buy right into their stop losses because this is a range. That's what I mean when I say phantom channel, right? A phantom channel is a channel that we're going to use for running those stops, for traps. Now, we may hold that channel, right? Again, tomorrow's FOMC announcement, I'm just showing you where I'm going to be looking for opportunities. If we don't see, right, if it holds that channel and goes lower, no harm done. But if it fails, then we know, okay, I know exactly where we're going. We're going back up to that high, and that's going to be a nice, easy money trade, right? Buying into that failure and, of course, bringing it back to the highs. Okay? Nice and easy so far. So we have trend lines in both directions. These trend lines in both directions give me easy, fadeable opportunities. Right? Remember, this is a trading range. I don't care what this channel looks like. Treat this as a range-bound market. That means as price goes lower, areas of interest below us, seller failure, buy it back up. As the price goes higher, areas of interest. Remember, we're going to batten down the hatches here ahead of that FOMC tomorrow, looking for a buyer failure to sell it right back down. Guys, you've got the plan now. Fade those breakouts on the euro. Don't be afraid to use that phantom channel on the euro. Same thing on the gold. I'm not going to be surprised at all if I come in tomorrow morning after a night's worth of sleep and see this price pushing higher. We'll look to fade it early in tomorrow's session. On the S&P, oh, you can just smell the shenanigans in the S&P right now. Look at this channel. Look at those candlesticks. That should be scaring the behoozes out of you right now, right? You can tell that's the storm coming there on the S&P, right? That sky does not look very clear there. And again, I'm excited to see what happens tomorrow on crude. The buyers, are they going to keep coming back and try to swing again? It can't keep going lower forever. You really? I bet they're thinking twice about that comment now. And again, I can't wait to hear what OPEC says in the December meeting. Don't forget, our next meeting in OPEC is first week of December. Oh, I can't wait. I can't wait. Guys and gals, it's great to be alive and a trader right now. I hope you're having a great week with us so far. Don't forget, grab your free pass. Download those chats for tomorrow. Register for the newsletter list. And don't forget, tomorrow we got inventories at 10:30. We'll trade around that for crude. The FOMC meeting, unless you missed the whole entire video, is at 2 p.m. tomorrow. Thanks to our friends at Econo Day providing the news data. And of course, before we wrap up, I do want to remind you guys to join our free trial here on our website. Guys, I take a lot of pride in the fact that we are the longest running, most well-established, fastest growing trading community on the planet. We've been doing it longer than anybody else on the planet, guys. Look for yourself. I've got videos dating back before most of these other educators were born, all right? Go back and watch for yourself. We've been doing this for a long time. I take a lot of pride in the fact that our free trial is the best in the business. Guys, register for our free trial on our website. And while you're here, don't forget, grab a look at our 3 levels of membership. Remember, we always have someone standing by 24/7, 365. Tomorrow is Fed Day. Tomorrow is Fed Day. Get a good night's sleep. We'll see you guys tomorrow, 8 a.m. Eastern Time. We open the trade room up. The cutoff tomorrow is going to be about 10:15 for crude ahead of inventories, 11 o'clock for the FOMC announcement. And I'm going to be back here again tomorrow talking about the plan for Thursday's session. Come back and see me. Be safe out there tomorrow. Be well tonight. Be nice to each other, will ya? And come back and see me again tomorrow. My name is Joseph. I'm out of here, guys. Adios, amigos. Bye for now.